Hello, I'm David Frazier, aka the Market Monk. Well, after testing the recording and production of this new financial market TV and radio show that we produced over the internet, after testing the production of the show over the past few weeks, we're now ready to begin producing this show every day of the week, that is every weekday, Monday through Friday at 7 o'clock in the evening Eastern Time in the United States, that is. So today I'd like to begin by saying this is probably not going to be your typical financial market show. And what I mean by that is I have found that a lot of these broadcast shows on the financial markets, news shows or so-called news shows, or videos that are done by numerous internet websites, tend to be entertaining in nature. And that's not what we're about. We're not here to entertain you. If you're looking for entertainment, well, you probably should go somewhere else. I mean, my thinking is, and has been for many years, that, well, if someone that provides information and advice on the financial markets helps an investor, speculator, or trader to make money in the markets and to minimize their losses, to avoid the big downturns, and over at least a complete market cycle to come out ahead regarding their financial market transactions, well, if we do a good job of doing that for you, that is helping you to make money in the markets by keeping you informed about the facts instead of the noise and a lot of the nonsense that goes on everyday basis, well, you'll have plenty of money to entertain yourself in whatever way you choose. Whether you want to travel abroad, go on cruises, dine out on a regular basis, whatever it is that you enjoy doing, playing or attending sports events, concerts. So we're not here to entertain you. We're here to help you to separate the noise and the nonsense from the facts. So having said that, today on Monday, April 28, 2014, the major market indices for both the United States and most other regions of the world were virtually unchanged today. If you see me looking aside, but that's because I'm looking at some notes. The Dow Jones Industrial Average was up 87 points today, and the other major U.S. stock market indices were essentially unchanged, as were the major stock market indices for Europe. In contrast, indices for Brazil, India, China, and Japan were down slightly today, but only very modestly. Gold prices were also down slightly today. In regard to the latest economic statistics, the National, I'm not sure what agency it is, National Association of Realtors, I believe it is, released today its monthly pending home sales index, an index that's based on signed contracts by persons who are planning to buy a home, and signed contracts to buy a home within 2 months of those signings. And that index was up considerably during March after falling over the preceding months due primarily to the unusually cold weather that was experienced in the United States during the winter months of this year. And conversations with a couple of friends of mine that I've known for more than 30 years and that have been home builders for at least 25 years, they've been telling me over the past few weeks that their conversations and marketing and sales efforts with or regarding prospective home buyers indicates that the housing market's going to pick up steam considerably during the months ahead. And that's very, very important because the housing market is a very reliable leading economic indicator for the United States, and also a very reliable stock market indicator. It has been for many, many years. It's that shouldn't really be surprising. I don't want to get into the details now. I'd like to keep these videos less than 10 minutes if I can. If you'd like to learn more about my thinking on that subject or any given subject regarding the economy, political developments, and the financial markets, I urge you to try one of our newsletters. We've had one primary newsletter over the past 6+ years, but we're in the process of coming out with some new publications that focus on specific sectors of the market. If you're interested in learning about what's really going on in the economy here and abroad, and what's likely going to happen during the months ahead, not what's already happened. You can't make money by what's already happened. You can only make money by forecasting more often than not the future direction of economic, geopolitical developments and stock prices. And that's what we try to do in our publications. I want to keep this really short. This is not about trying to sell you something, although we would like you to subscribe to our newsletters. Helps us to make money so that we can continue to produce these shows. If you'd like to try one of those newsletters, go to our website at www.themarketmonk.com. Look over towards the right in the gold-colored menu bar for newsletter advisory services, and there's a link underneath there for financial newsletters, and you can subscribe to our letters, to any of the letters that you choose, or you can simply try them out on a completely free basis for a period of 60 days. Anyway, all the information's there. I would encourage you to do that if you're not a member of one of our services. Now, so I just went over what occurred in the financial markets around the globe today, and went over a very important economic indicator, a leading indicator for the housing market, that is pending home sales. So now let me talk very, very briefly about the major noise in the financial markets today, or at least in the U.S. markets, and that concerns an announcement by Bank of America today that it had discovered some errors in the calculation of its what are they generally referred to? Their capital ratios, statistics that indicate the degree to which Bank of America or any other commercial bank has money to support its operations. And that's very, very important, because if those capital ratios are very low and the economy goes into a recession, well, banks that have very low capital ratios are at risk of losing money, even going out of business. Quite the contrary, banks with very high capital ratios are in a much stronger position financially to survive any downturns in the economy and or their operations. And Bank of America discovered some errors that it had made in its capital ratios, which, by the way, are substantially higher, even after correcting those errors, than what the banking authorities here in the United States require. And it lowered very, 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 very minimally all of its capital ratios, but very, very minimally. I mean, to the extent that it really means nothing. But unfortunately, because it was forced to make these changes, the Federal Reserve has required Bank of America to retract its plans to buy back $4 billion worth of its stock this year, and to raise its dividend from 1 penny to 5 cents per share. And so that announcement had a negative impact on Bank of America stock today. The stock fell about 6% today. But I don't see this as a problem. And I don't see it as a problem whatsoever. I mean, I've done very thorough review of Bank of America, very thorough, regarding all of their operations, their commercial banking operations, retail banking operations, their wholly owned brokerage firm, Merrill Lynch, Wealth Advisors. And Bank of America is very strong financially. Merrill Lynch is doing fantastic as far as its assets under management and the growth in those assets and the returns that it's making. And with the housing market showing strong indications of picking up steam over the months ahead, I expect Bank of America also to benefit from likely issuing more mortgages. So there's a lot of positives to say about Bank of America. And in my opinion, based on a lot of research, the 6% drop in Bank of America stock today did only one thing that's important, or there's only one thing that's important about that drop, and that is, in my opinion, it presents an excellent buying opportunity for stock market investors and speculators. So I'm going to leave it at that. I think that's all that I have for now. Yeah, that's it. You go to our website if you're not one of our subscribers and you're not familiar with us, and click around. I think you'll find a lot. Well, I know you'll find, if you bother to explore our site, a lot of very helpful information that's provided at that site. So let's leave it at that. I'm done. I'll speak with you again tomorrow evening. Thank you for watching and listening.